Spotify's live debut on the New York Stock Exchange. Spotify is due to IPO any second now. For the last 2 hours or so, 3 hours, they have been setting the price. We'll get into the details of this unusual listing, but we believe with the price now between 167 and 170, the narrowing, things are getting very close indeed. Also on today's program, President Trump leaves another Amazon review, and he calls the post office the delivery boy for Amazon. Tesla shares are rebounding on the market. We'll explain why that might be the case. Put it this way, live from the floor of the New York Stock Exchange, this is Quest Express on the day Spotify IPOs. Welcome to the floor of the Stock Exchange, where we are awaiting Spotify, the actual pricing and the first trade which will take place. We'll get all to that in just a moment. Quick look at the markets and how they are trading today. The Dow is up 117 points. It is off the highs of the day. It's a gain of just about 0.5% or so. The S&P 500 also similarly up roughly around about 0.5 to 0.75%. But you get an idea of the sort of choppiness of the day if you look at the graph, and the VIX index showing that volatility is weaker. On Europe, shares were down across the board. Not surprisingly, shares in Europe are following on what they've seen over the past few days. Remember, it was a long holiday with Easter in all the major European markets, the trade fairs as well. So, now let's talk about Spotify. It is by far and away the most interesting event of the day. Spotify's shares are due to start trading any time now. This is a direct listing. In other words, the company hasn't issued any new shares. There's no underwriter ready to eat that which the market doesn't buy. These are existing shares from investors, family, and colleagues in the company that are going to be listed. But setting the price for this has been a tortuous process, somewhat. There is somebody on the phone. Get over here and you'll see what I mean. Right in the middle there is somebody on the phone talking to the bankers, Morgan Stanley. They are matching the various offers for shares versus those who are selling. And the range, which started at 132, has narrowed to 167 to 170 a share. As that range gets closer and closer and closer and closer to the point where buyer meets seller and there is price transparency and agreement, at that point, not at all sure what happened there. We'll send somebody in to find out what happened there. Stacey Cunningham is the Chief Operating Officer of the New York Stock Exchange. This is it's an unusual way to do this, isn't it?
It is unusual, and the first of its size to take advantage of a direct listing style process. So we're really excited about it today.
So I'm going to swat onto that side so that we can continue to watch the goings on behind of that. How close they've are. They're asking. It's fascinating.
We're getting close. We're getting close.
Why this? I know you're agnostic to a certain extent over which system is better for a proper IPO with underwriters or the direct listing. What's the advantages of this?
Well, for a company that's accessing the public markets, they have a couple of different reasons why they might do that. For some of them, it's about capital raise. For some, it's about the brand and raising their visibility so they can continue to grow. For others, it's about a liquidity event, providing currency back to their existing shareholders and also a currency that they can use for future M&A. For Spotify, it wasn't about those first two. They didn't need capital and they didn't need that branded visibility, but they did want to access the public market. So they saw the value there and they felt this was the best mechanism for them.
They also didn't want to do any of the dog and pony. I mean, there was no ringing of the opening bell. The CEO isn't even here. You're disappointed because, and I know you're sort of, again, agnostic to an extent, but it is nice to have an event.
This is an event. I mean, this is certainly, if you talk about the marketing value of a company coming to the public markets, the fact that our market model shines during the price discovery process and it's unparalleled value, there's no better marketing event than what we're looking at right now. So no, we're not disappointed. It was never about the pomp and circumstance for Spotify. And we've been working with them for 2 years, and that was never their driver.
Would you, again, I know you're agnostic, but these sort of listings are they can be extremely volatile. they involve an enormous amount of greater risk than a straightforward IPO with an underwriter underneath it and a book building. Because what's happening at the moment is literally they're building the book between sellers and buyers. Would you recommend this as being...
Well, I certainly would never recommend the right path for each company, but we're going to present to them what is available out there. And when you talk about volatility, we hit volatile events in the markets all the time. The markets are not immune to volatility. Our mechanisms that we put in place to prioritize price discovery, to take the time to find an equilibrium price, and to be ready for when there is volatility in the market, that's what we do every day. And this is what we'll see today.
The fascinating part about it is it doesn't matter where you might want to buy Spotify shares. It doesn't matter which country you're watching us in, anywhere in the world. All that matters is really, in this computer age, a man on a phone, two men or women on a phone, talking and finding out prices.
Yeah, and this is why the human element has continued to be so important to the New York Stock Exchange market model, because you can't ever replace that. You can certainly automate things, but this is why we see real value in that price discovery process, and we keep humans part of that conversation.
All right, last question. The IPO, I mean, if I look over there, I can see IPOs that have been less than stellar in terms of future prices. Take Snap, take Twitter, arguably. The tech sector has been beaten up once they've IPO'd. So it's a brave tech company that comes to market at this particular market at this particular time.
Yeah, I think, again, one of the important things to identify is that Spotify isn't raising capital. So they're not looking to find the best price possible out in the market for an offering that they're doing.
So in that sense, if they misprice to that extent, you can't really misprice.
Well, they're letting the market price. They're letting buyers and sellers.
Then the only people who gain or lose will be the existing shareholders.
And it's those that are choosing their value. The existing shareholders have a choice whether or not to sell.
Right.
No one's locked in right now. They're letting the market determine whether or not they want to participate right now in this pricing event at this moment in time.
Stacey, really good of you to take time on a busy day.
Thank you.
Thank you very much indeed. Stacey Cunningham. Well, Stacey comes over. We will just look at the market over here, just to update you with where the market has been today. The Dow Jones Industrials, it's showing a gain of just 0.5%. The S&P is also higher by roughly the same. Gold has given back a bit of its ground. The FANG stocks have put on a bit of weight, and the VIX index is also lower. Now, Spotify, which is getting ready to trade over here, and we're going to stay as live as we can with Spotify over here. Spotify is leading the battle, if you like, for paid subscriptions at the moment. Spotify has 71 million subscribers. Apple Music, 38 million. Pandora, 5.5 million. Joining me, Claire Sebastian. First of all, declare conflict or interest. Which one do you use?
I am a Spotify user.
Are you a paid Spotify user?
I am a paid Spotify user.
Sure,
yeah.
So there we are. It's useful to know these issues, right?
Right. But the good thing about Spotify is you can use it across all platforms, unlike Apple, which is in, obviously just the Apple walled garden. Spotify is across all your Amazon Alexa if you have an Android phone. But Richard, we're starting to see a bit of excitement coming from over here. There's a Citadel representative there who's updating the floor brokers. I have actually confirmed just in the last few minutes with the New York Stock Exchange that this will be the latest opening of an IPO in that they can remember, as far as they know.
Normally IPOs, the market opens at 9:30. You would expect an opening by 10:15, 10:30. Well, we're 3 hours, 2.5 hours into the trading day. Why is it taking so long?
Well, it's a complicated process. This is something that isn't underwritten, as you've been talking about. It's got no, big investment banks that are preventing the stock from falling too low. Essentially, it's a free-for-all. Anyone can come in. It doesn't have to be institutional investors. It can be mom-and-pop investors who want to come in and just, see what they can get. And there's clearly a lot of interest. You can see that the price has been going up. It's been narrowing in the last few minutes.
That reference price was the price that was indicated by Morgan Stanley last night. It wasn't an open price, and it wasn't an IPO price.
And that was 132.
132, and now we're up to 167 to 170.
Right.
And the reason we're going to talk about this so much today is because it's indicative of what this market does, and also the difficulties in this this current environment?
Yeah, absolutely. I mean, this is quite a time to be listing as a tech company on the New York Stock Exchange. Richard, you know, we've seen the fears around Facebook and regulation. We've seen the Twitter assault by the president on Amazon. I think there's going to be a lot of scrutiny on Spotify. Of course, this is a company that, well, it has 71 million paid subscribers, 159 million subscribers overall. That's almost as many as Snap. It still hasn't made a profit.
Final question to you, Claire. The way in which this is being done, I mean, just look, I can honestly say, maybe not since Alibaba or a couple of others, you know, do you get this large number of floor brokers all waiting to find out the open price? Is this a safe way to proceed in terms of IPO listings?
That is what Silicon Valley is going to be asking itself today. There are other big tech companies, Richard, Uber, Lyft, that haven't gone public yet. This is a lot cheaper without the investment banks to go public this way. They're going to be looking at this and seeing, is it going to work? And the measure of that, I think, is not so much the price as it is the stability in the price throughout the day, how much volatility we see.
All right, next is Shelley Palmer. Go and sort that over here. Whilst we get ready for Shelley Palmer, let me show you two stocks that may want you to think twice. Snap is down 3.5%. Twitter is down 2.2%. And you'll remember Snap, which of course IPO'd around 18-19, it got to 27 before plummeting straight back again. So there is a cautionary tale for any tech stock that wants to IPO in this market. And again, if you look at Box, all of these stocks, which are Shelley Palmer. Let's go back over here so we can keep a good idea.
Good look. Good solid look.
What do you make of it?
I think it's very, very exciting. It doesn't change anything for Spotify because it's another day in the office, as X basically said. You know, they're not raising new money. They're just going to give their employees some liquidity. So they still get all the same challenges they had yesterday, and they're going to have them tomorrow, which is Apple's nipping at their heels. You've got Amazon Prime. You've got Google Play Music, and they've got to be the de facto leader and stay the de facto leader. They want to get to 95, 96 million subs by the end of the year. We'll see.
But where is the risk in Spotify? In the sense that, look, all right, declare your interest. You're a Spotify.
Paid Spotify.
Paid Spotify. Yeah. So I've just become a paid Spotify. I got tired of the commercials.
Doesn't everybody?
In the end. So I'm a paid Spotify. Now I'm in Spotify. Look, I'm not a music geek. I like what I like. I play the same 10 things a million times. Why would I move to Apple Music or Pandora now I'm with Spotify?
You're probably not going to move. That's really not the question. The question is growth, profitability. They are enslaved by the major recorded music companies, as are all of the other music services. It's not an expanding market forever. There's a finite number of people who are going to pay. So they have their work cut out for them. I'm not saying it's a good idea or a bad idea. I'm simply saying that of all the business models in the world, streaming music is a lot more like being in the movie theater business than it is like being Netflix, which I constantly hear comments.
Now, you and I have talked about this business because you're an expert on streaming music.
A little bit.
You've written about it and you've been involved in it. What is the complexity? Because Spotify has had difficulties on copyright issues. They all have.
And everybody will continue to. Music is one of the most complex copyright systems ever, and the royalty streams are done by various rate courts. They're different in every country worldwide. Performing rights societies have completely different rates all over the place. And then there's the master licenses, which have to come from the recorded music companies. There are a lot of people with interest in every single stream that's put out by every single streaming company.
We'll take a look from a camera that is actually showing us the trading post at the moment. You can get a good aerial shot of what's happening. Shelley, you spend your life in the digital world. While we look at this picture, please reflect, as a digital man who believes in everything digitally. I
do.
The human nature of what we are seeing.
It's spectacular. Look, there's nothing like an IPO, and this is a listing, so it's a little different, and everybody's there, and it's been an auction going on for the last hour and a half, 2 hours. Wait, maybe now.
Stay with me. I want to hear what they're saying.
Below 70 on 5.
No, they're still just setting the price.
And that's been going on all morning.
This is going on literally minute by minute.
Yeah.
I could ask anybody how long they think it's going to be.
Yeah.
And
they're all shrugging their shoulders.
they're all shrugging their shoulders.
Yeah, absolutely.
How long do you think it's got to go? Any idea? Unclear. But it is the longest opening of an IPO at the stock exchange, we believe. So what's the biggest risk for Spotify?
Biggest risk for Spotify is the same risk, like I said, that was yesterday. If you're a shareholder, you're buying shares, you've got all the stock market risk going on. But in practice, Spotify's got the same problems tomorrow that it had yesterday, which is it's got a crowded market space that's getting more crowded. And to be fair, Richard, it's a business that has yet to prove that it's profitable. So we'll see, because they haven't had one profitable quarter, and neither is anybody else in this business.
Why not?
Because the recorded music companies, as soon as you start to make a little money, are going to raise their rates, and there's not a whole lot you can do about that.
But at some point, though, I need you as the interviewee as much as you need me as the interviewer.
Correct.
At some point, the recording music industry is going to say, these guys are the only way people are listening to music.
Look, it is one of the only ways people are listening to music. Downloads are pretty much done. Physical media is pretty much done. Streaming is not only the present, it is the future. And it's just a question of working out the dollars.
And vinyl?
You know what? There are people who will argue with you about that all day long. It's a little bit resurgent at the moment, but let's be serious. At scale, it's streaming.
Kelly,
all right, Richard.
It is an extremely interesting day.
Yeah, it's a big day.
All right, so as we now puts this into perspective for the market, I want to update you on other stories that we've been following during the course of the day. The issue with Amazon. President Trump this morning once again tweeted that Amazon was using the post office, in his words, as its delivery boy, and said he's got the facts and proves that it is costing the post office a fortune. He then went on to say that the post office may or may not even know this. In other words, suggesting some form of collusion. Before the presidential tweet, the stock was up 2%. Immediately afterwards, the stock fell, all of which proves that once again, President Trump is determined to at least harm the valuation of Amazon, whether intentionally or not. Matthew, good to see you. When we spoke yesterday, terrible day by the end of the day.
Yes,
I mean, we were down just a couple hundred, 100, so down 450. Could have been much worse, down 750. Before we talk about the market, what do you make of all of this?
It's tremendous. This is what we do down here. We're setting price, and I think the price discovery mechanism works the best down here, and it's showing today. Tremendous IPO, and that's in the face of what's going on in technology right now. This is the biggest tech IPO of the year, and it's being so well received in the marketplace.
But if it's the biggest tech IPO, and if it is of such importance, it's bizarre, maybe the wrong word, unusual that they've chosen this direct listing, which is fraught with difficulties, as were evidenced by the fact it's nearly 3 hours since the market opened, and we're still watching at a price here.
Well, I don't know if it's fraught with difficulties. We've seen them before. They've been handled before down here on a smaller scale, and they've been done successfully. So there is a model for it, and this is what fit their needs the most. So, good job by them to choose this route.
The market overall, we're up 104, but look at that dip on the graph of the S&P earlier. We took a dip, it recovered. It's still looking for that direction, isn't it? What I suppose really what I really wanted to know from you, in the past, the market has seemingly always wanted to rise in recent months. Despite it being kicked, it'll come back up again. Do you get that feeling that upward momentum is still there?
It's certainly still there, and I think right now we're facing headwinds from Washington right now, and if we get the U.S. economy back online and we start to see earnings, that may be the catalyst to take us higher. It certainly sounds like to me you're asking for more volatility. You want to see some more of that huge price moves. This is a good action day. This is some solid stability after a huge down day. So we'll take this as very constructive right now.
Last question to you, as you get ready to talk to Brian Stelter on Amazon. From a market's point of view, we'll talk about the politics with Brian in a moment, our senior media correspondent. From a market point of view, what do the market makers here make of a president tweeting about individual companies in such a way?
Well, as a market maker, you're trading the order flow. That's what you're dictating your moves on. So as every headline approaches the marketplace, and seemingly been negative, unfortunately for Amazon's sake, the market is tending to go in one direction. It hasn't stopped. We haven't seen that base being built, and there's fraught with concern about more of these tweets coming forward, and this becoming a much bigger deal. So, from a market-making standpoint, you want to be very careful in this environment because there's so much more that's affecting it.
Good to see you, sir.
All right,
thank you very much indeed. Matt Cheslock joining me. We'll be with Brian in just a moment. I need to just get back in with you, right into the thick of it, just to find out exactly, see Still got some time to go, have we?
It seems that way.
Seems it's not going to be as a quickened. It's already 3 hours.
Yeah, we're getting close, but not just yet.
Right, the price indication still at 167 to 170. Talking to Brian Stelter. Brian, the Amazon tweet this morning's, it was an odd one, this one, because not only did it say Amazon, the president said he's got his numbers right and it's costing them a fortune. That last line of the tweet suggested almost collusion by the post office in losing money to Amazon's gain.
Right. It's easy to forget when we read the president's words that he is the boss. He's in charge of the executive branch, which includes the post office, which includes these contracts. Time after time after time, Richard, we see the president blowing off steam, venting about various companies or topics as if he doesn't have any role in making a change. What will be curious is whether the president will actually try to move to change Amazon's tax structure, whether he will try to have the Justice Department take antitrust action against Amazon. So far, all we've seen are words, not actions. A lot of complaining, but no actions. It is notable the stock has been up and down because of the president's words. Right now, Amazon stock up just a bit, up a few dollars, about a 0.2% right now. But it's been fluctuating throughout the day, as you said, based on the president's words. Amazon, meanwhile, not saying much at all. It's letting this hope. I think the company's hoping this will blow over.
Right.
Certainly not expecting regulatory action. Our colleague Dylan Byers is talking to sources at Amazon who say they think the president might keep complaining, but won't actually follow through on his threats.
What are his options? And by the way, Brian, let me apologize in advance. If this thing starts trading behind me, I will be jumping in and all over you. So tell me, what are the actual options? What can he actually do about an existing contract that may or may not, at bulk rates, that may or may not be costing them money? What can he do?
Right, he can pull an art of the deal, try something unusual, and direct the Postal Service to renegotiate or something like that. But time and time again, the president runs up against legal restrictions about what he can actually do or what he can actually direct his departments to do. And postal regulators have been clear that this contract with Amazon actually brings in billions of dollars and benefits the Postal Service. That the U.S. Postal Service would actually be in a worse, more precarious position were it not for Amazon's billions of dollars. So this is one of those cases where the president doesn't have all the facts and he's making comments, making attacks based on an incomplete understanding of what's going on. That is partly why a lot of folks believe this is about the Washington Post. Of course, Jeff Bezos' his other job. He owns the Post. He doesn't run the paper. He lets Marty Baron do that, but he owns the paper. And to a lot of people, this looks like a misuse of presidential power. Right. President Trump using Amazon, attacking Amazon to punish a newspaper he doesn't like.
All right, Brian Stelter, we thank you for that. Here at the market, we are still waiting for Amazon, sorry, not Amazon, for Spotify, I should say, to start trading. The interesting thing about this stock is nobody really knows when this is going to actually happen. What we are seeing is a tightening of the price, 167 to 170. Claire Sebastian is with me. You've been studying the mechanisms by which this is going to happen.
Right, this is what the NYSE are giving out today. This is a brochure just explaining to people how things are working. And I think that just speaks to the unusual nature of this, Richard, that they have to issue a brochure going through the various steps, a regulatory halt at 4 a.m.
By my reckoning, we're up to step 6. As the price range tightens, the DMM, that's the designated market. If you take the pump shot from over the top, you'll see the man on the phone right in the middle. He says the DMM will announce that they are getting very close and request final orders. The DMM may consult with a financial advisor before choosing a final opening price, locking in all interest and opening the stock. The regulatory halt will end and stock will begin trading.
Right, and I think there's a sense that this is happening fairly slowly, Richard. This is now the latest opening. At whatever point it opens now, this is the latest opening of the public listing in history. Before that, it was Alibaba, which opened at 11:53 a.m. And there's a sense that that's happening because the market maker is taking its time. It's really trying to make sure that the volatility is reduced when it does open.
So, right, you go in there and find out exactly exactly how close we are to this, because we really are in uncharted territory in a way, as we look further towards this. Now, it's all about media today. Fox is offering to sell its shares in Disney, in Sky, to Disney, and Disney is basically saying it will buy Sky News in the UK. The goal is to try and solve a regulatory problem that has bedeviled Sky since the beginning. David Fogden is with me. David, when we look at what's happening at the moment with Sky, is it likely that the UK regulator will accept this as being a legitimate solution?
It's not clear. I think the regulator would love to find a way to find a palatable silk path to approving the Murdoch deal, and yet is really wrestling with the question of giving Murdoch control of more of the news coverage in your country. I mean, in a sense, he already has it. His 21st Century Fox has a controlling 39.1% stake in Sky, the larger, satellite TV powerhouse there in Europe. And in a sense, he can control Sky News. On the whole, he's been seen as a responsible proprietor. A lot of people in your home country of the UK, of course, feel that at times the Murdoch family have been irresponsible proprietors of a number of their important newspaper titles there. And there's real issues with the regulators on this. Disney is saying we'll take Sky News off 21st Century Fox's hands, regardless of whether our offer to buy most of their holdings goes through. There's no way in which Disney actually wants Sky News on its own. It's essentially a loss leader for Sky, but it's a reputable channel.
Right.
But Disney's trying to, cut the Gordian knot.
Okay. Good to see you, David. Thank you. We'll have to keep it a little bit brief as we're just watching what's happening, but we do need to watch the Disney story as it continues. While David was talking, it looks like something is happening. It looks like, let's go see. So let me just find out. Does it look like?
Getting close.
Getting close. Getting close is the word. Shelley Palmer, it's getting close.
It's getting close.
Tell me what you make of all of it.
I actually think this is extraordinary because they've been doing this for basically 2.5 hours, but it's come down just a little. It's close 168, 165, so somewhere in there is going to be an opening price, and everybody keeps saying it's any second, so it's any second.
Okay, we're going to stay with you and me
all right
the way through as we just pass exactly what is happening in technology at the moment.
Sure.
As we look at the tech stocks, the Amazon beaten up.
Yes.
Facebook shot itself in the foot.
Yes, sir.
You've got the whole question of what is taking place, and yet there's no systemic reason for any of this.
Well, there may be. There may actually be a systemic reason, Richard, and what it could be is that people are finally waking up to the fact that they are the product in many cases, and their data has a value that they had not put on it in the past. And as Congress realized they could get elected and or unelected using data, and as we've been in a situation where people are finding out that their data is being shared in ways that they had no idea about, even though it's been going on for a decade, there seems to be a public consciousness, and that may be dragging some of the tech stocks down. And then there's the political aspect, which is, as you pointed out just earlier, the tweets this morning were unprecedented against Amazon. That's really one of the most fantastic tech companies ever created, and it got beaten up for not a lot of reason.
But I come back to this point, there's no common theme to them. I mean, we talk about tech in trouble, we talk about tech worries, but Facebook is the author of its own misfortune.
Yes.
Amazon,
it's just too big, according to certain people, and it's eating the world.
Has an element of CEO stupidity,
if you can call it a tech company, which I think a lot of people would.
But the model. I mean, it's up today because the model production numbers were getting better.
That's right. That's right.
So look, there's no common theme.
Well, the theme is super big and tier one tech, right? The theme is Google is gigantic, Amazon's gigantic. They call them the FANGs: Facebook, Apple, Amazon, Netflix, and Google. And you can throw Microsoft in there if you feel like it. These companies are extraordinarily large. They're impenetrable. They are the holders holders of data. They own data sets that you just can't get to behind walled gardens, and they're very frightening to people who are trying to understand what actually happens with that data. So yeah, what? Are we there?
No, we're not. And I want to just pause because the range has narrowed. Okay, we were 167 to 170.
Yep.
So clearly what's happened is they'd slightly over the offers. Well, I'm guessing that the sellers were more than the buyers, because now we're down at 165 to 168. And once you get into this $3 range, you're getting pretty close to opening.
Yeah, they've been saying that. I mean, look, it was at $3, 167, 170. So we'll see how this all actually goes. Anyway, Richard, back to our point.
Right.
The story we're talking about right now is, why is tech taking a beating? And the answer is nobody actually knows. But it seems like it's open season on tech. It's an easy story to tell.
Yeah.
It's an easy story to tell, and it's a scary story to tell.
We're going to switch you out.
Absolutely.
See, you don't go too far away. We're going to switch you out. We're going to talk in a moment to Stacey Cunningham, the Chief Operating Officer for the New York Stock Exchange. Claire Sebastian is also with me. Claire, want you to get back in there, if you'd be as kind.
Yep.
Shout on my mic. Get back in there, find out what you can, see what's happening.
Got it.
All right? If you go in there. Meanwhile, Stacey is with me, Stacey Cunningham, Chief Operating Officer. So, a little bit of history. It's the longest opening of a stock of the New York Stock Exchange history.
It is. We knew, we expected that it might take a little bit additional time to go through the price discovery process, and that's what we're seeing here today.
I'm fascinated by it, though. I'm fascinated that it takes, I mean, we're dodging around 165 to 170.
Yeah.
I guess I could hear an argument if somebody says, does it make a difference if it's 166 or 167?
Well,
in the great scheme of things of 3 weeks down the road, nobody will remember the tightness of it.
No, well, if you were part of that trade, you may remember, right? And if you look at an IPO, there is an underwritten offering that informs investors as to what might be a valuation for the company. And it's a little bit different here. So we're trying to take our time, find a little bit of stability. One of the benefits of our market model is it does tend to reduce post-market volatility. And so we're absorbing some of that now throughout this process.
And from the stock exchange's point of view, because again, you're agnostic on price, you're agnostic in the sense of participants to that extent. You're a regulatory institution that's here to facilitate. What's the significance of this for you?
Well, for us, it's just one more way that we can meet the needs of our issuers as their needs have evolved over the past 200 years. We're always looking into how can we create an environment that helps them access the public markets, and that's what we're doing here today, and trying to have them meet up with investors and provide a currency for them is important.
When you look at the percentage of New York Stock Exchange company shares that are traded on a daily basis on market here versus off market, what's the current sort of numbers at the moment?
Yeah, there's still a large percentage of trading happens across the different 60 venues that are out there in the market.
Right.
About 25% of our volume comes from participants on the trading floor, the floor brokerage community, as well as the designated market makers.
Now, if let's just say, I want to buy, for argument's sake, 100 shares of Abercrombie, let's say, but I want to make sure it comes to the floor. Can I do that these days? It's difficult to.
Yeah,
you just ring your broker, you buy, 10 to 1 odds. The broker, if it's a big broker, will already have inventory of it, and will just sell out of inventory.
Yes, it's a question for your broker, and some brokers do provide customers to direct their order flow to a particular venue.
I'm going to make sure that the next one comes to the floor,
All right.
and I'm going to stand there and watch it.
That's great. We're getting close, so I think I'm going to head over there, yeah.
You're getting good. All right, give us your microphone back, and off we go. Good. Thank you very much indeed. The market, let me update you with the market. We are going the full hour on the Quest Express because it is... You may ask yourself, well, so what? It's one stock. It's Spotify. It's a busy day. There's bigger companies, more important companies. But I think that ignores the point of what we're seeing today. What you're seeing today is a market performing to almost absolute perfection. You're seeing a traditional way of selling a share, of launching an IPO. And you're seeing a process underway behind me that is unique to New York. traders and brokers gathering around, arguing with each other, offering and to buy or to sell. Claire Sebastian, I sent you on a mission.
Yes, I went into the scrum.
You went right in?
Yeah, and I heard the designated market maker from Citadel Dell. He just shouted, "Not close." So
What?
he just said, no, I don't know what that means.
Oh, I do. Well, where's that piece of paper?
Long as a piece of
Where's
string.
our card? Hang on. Let's go back to the
But
rules.
you saw the range come down. There's been some reevaluating.
Yeah, but look,
people were saying that
the DMM may consult and then he will shout, getting very close. To which he's saying,
not close. But then that isn't a time measurement. We don't know exactly what that means. But the range should come down, and you can see the time under the range, which is when they're any time after that they can theoretically start trading. That's what people were telling me.
hang on, just carry on talking.
So yeah, the range has gone up again.
Oh, now he says he's tightened the range to 169 or whatever, and that's 69.5, and he says if that holds, he's going to open it.
Right, so there's been some reevaluation going on, Richard, literally since we've been on air. We saw it up at this range, 167 to 170, then it came down, 165, 168. They're getting more interest coming in, that's what people were telling them there, and they're slightly reevaluating on value based on the supply and on the demand out there. So, it does feel like we could be getting slightly closer at this stage, but it could still go on as they get more interest.
Okay, it begs the question, in 2018, is this a satisfactory way? I mean, it's very nice to watch, and it's giving us all a great deal of theatre, and arguably we are seeing pricing perfection. But is it a fair way to proceed?
Well, I think we're breaking new ground, Richard, literally as we speak.
Let's get in, come on. So what he's doing,
Getting good.
oh, he's just said we're doing good. So what he's basically doing is he's narrowing the price range even further and further and further. It's close, according to this gentleman over here. It's close?
Yes.
All right. It is getting close, so we'll just basically hang around here. Carry on, Claire.
Right, so I think, Daniel Ek, the CEO of Spotify,
He's 69 and a half.
5.5 million shares.
Sorry?
That's the supply, 5.5 million.
5.5 million shares at 169 and a half. So the range has come closer and closer and closer. The guess is now we are just a couple of moments away. It's getting close?
I don't know. It's hard.
If it stays like this another minute or so, he's probably going to open.
Right, 169 around about
169 and a half-ish.
169 and a half. Thank you, sir.
You're very welcome.
So,
Right, so you've got to get a bid that needs to hold. So that's why they're saying the next couple of minutes are going to be crucial, because if it can hold without new interest coming in and new reevaluation, then they can start selling. The whole point is to even out within a range so that you don't get too much volatility, Richard. But Daniel Ek, CEO of the Spotify, he said he wasn't interested in the pomp and circumstance. I'm afraid he's got it a little bit on the floor of the exchange today.
this has got a feeling that he wasn't interested in an opening bell.
No.
He wasn't interested in any of these things. Why not?
Well, he said this is a more
Sorry?
accessible...
What happened?
167 now.
So we've gone back a bit.
Going back.
167 we've gone down. So clearly what Claire was talking about, the reevaluation, the price didn't hold.
It didn't hold. I guess they've had new
But
people
we're
coming in.
still
new
within
interest.
167 to the one.
Still within the same range, yeah. So the point of this, from Spotify's point of view, Richard, was to allow them to buy and sell shares as they already do. Employees have always been able to buy and sell their holdings just on a bigger stage. I think this was supposed to open a new chapter for the company, and they wanted to do it in this way that cuts out so many of the middlemen, so many of the investment bankers, because it's more accessible.
Is that justifiable, do you think?
Well, I think that's the question that people are asking, and I think, there are cynics out there.
Hold the line. 167. We're just getting straight in here to see exactly what's it.
167.
And is it holding?
5.7 million.
167, 5.7 million. But,
As you said.
and you think it's going to be close?
Very close.
The view is it's now getting very close to actually the open. We may as well. Claire, come back in here and join me. 167. It's looking like Claire.
Yeah, it's looking like that's sticking. You can see the CEO of the New York Stock Exchange is actually right in there as well, Tom Farley. So clearly this is something that's very important for them as well.
If you come with me, in there you can see the man who's got a wedding band on his finger and he's on the phone. He is the guy who is actually with the guy next to him from Citadel, the designated market maker. They are the two of them that are going backwards and forwards between the exchange here, Morgan Stanley, the financial advisors, collating the offers and the bids, and putting it together to get what you were talking about.
To get a range, essentially matching the buyers with the sellers, because what you have here isn't a capital raise, Richard. This is an auction of existing shares. So what they're trying to do is find a place at which everyone's happy at settling, and then when the market opens, you get less volatility.
And we have the New York Stock Exchange chief executive in there, and you have the chief operating officer who's also in there as well. Claire.
So clearly this is a big event for the New York Stock Exchange. They haven't done this before with a company of this size. I think that's why you've seen that they've even produced reading material on how it's going to work. Everyone is familiar down here with how a traditional IPO works, but they've had to lay out all the steps of this, and we're now approaching the end.
All right. We'll have Shelley Palmer coming up to put it. Whilst we continue, let me just update you with the general market view at the moment. Volume is 286 million shares. Frankly, that is extremely light for this time of the day. Up volume is higher than down. We have 119 on the Dow, and the S&P 500 is also gained. Interestingly, the VIX has given back some of its, not about 8 to 10% of its value, and gold is weaker. The FANG stocks are higher. But in this market, you're not seeing much other than Spotify.
That's
it's
all.
Exhausting.
It is. It's just Spotify all the time. Spotify all the time. Let's see what happens. Well, we're actually pretty close, they say.
They say we're pretty close, but not as close as we might have been.
No.
He's getting close. Basically, what the guy in the middle... Oh.
There you go.
Getting... Spotify looks like it's about to open. There'll be a lot of noise. Shelley?
169 and a half, 167. It's a number like that.
Let's see what they've gone for. What was it? And this is just classically what's going to happen in this sort of environment. No one's quite sure exactly what the situation is in the middle there. It looked like it was at 167 and a half. Classic. You couldn't write this. Shelley Palmer.
Hey, Richard. 167, 168, 169 and a half. It's not going to be higher?
I have no idea.
No one knows. But everyone just clapped, so it's ready to go.
No, we think it's ready to go. we think it's ready to go.
We do think it's ready to go.
And everybody's just walking around saying, what happened? This was inevitable, though, Shelley, with this particular form of sale. Oh, it looks like it's gone down. Did I just hear 165? Shelley,
Look, the volume was at about 5.5 million, 5.4 just a few minutes ago, and all of a sudden this has come down after they all applauded and got all excited. So I'm not 100% sure what this price is going to be. They're screaming about it now. Hard to hear.
It's hard to hear. I mean, you've got to ask yourself, is this a satisfactory way to proceed?
I think it's going to be very satisfactory because remember, all they're trying to do is get employee liquidity. All they want to do is get their money out of Spotify. They're not trying to raise capital. They're not trying to get anything happening here, with market awareness. Everyone knows what Spotify is. I'm a paid Spotify user, so are you. Everyone knows what Spotify is. All they're trying to do today is set a price so that the employees can get their money out of the business. 1 minute? Okay, 1 minute. That's exciting.
Right. While they're just doing this, John Williams has just been announced as the new New York Fed president, which is an important position, obviously, besides because the New York Fed president, or the president of the New York Fed, has a permanent seat on the FOMC and is a permanent voting member. So John Williams... Oh, hang on, back to Spotify.
There it is.
And there it is, 165.10.
Yeah. Well, there it is, Richard. Now the stock is open and it's trading.
The stock exchange feels like it's just given birth. It's, you know, it's such a torturous, long process. All right, let's just discuss what now has happened and where we are. The stock is now trading, okay, at 165. Let's come over here and I'll explain what it is you're looking at. 167.5, that is the current price that it's trading at. The reference price was 132. Therefore, it's suggesting a stagger punt of 26%, $34.87. But the actual price that they sent it out at is at 167. So there you have the way the market has priced this particular stock. Was this the smoothest, most elegant, sophisticated way to sell or to launch a stock on the stock exchange? Absolutely not. It was rambunctious, it was tortuous, it was long-winded, but it enabled the most perfect of price transparency. Every market participant was able to be involved and to see the way the designated market maker brought the price closer to closer. And there you have 168 now, so it's already going even higher than the 165 that it launched at. Claire Sebastian, what was the price that it went at?
165.90, 12:43 p.m.
165.90 was the open price.
165.90, yeah.
Right, and it's now 165.98, so it's holding around.
Pretty stable, yeah. There was a moment there, Richard, it was pretty tense. There was a moment when all the traders were saying they've frozen the book. That means they're about to start trading, and then they didn't. And then the price changed again. That was all within the space of the last few minutes before we saw it open. So I think, you know, that speaks to the fact that this is a new process they're going for a company this size. But as you said, real transparency in how the bids got set.
All right, but at one point it looked like it was at 169.
Yeah.
And then what came down to 167.
Yeah.
So all in all, you know, this range, even though it's tightening, is extremely volatile.
Well, I mean, within a fairly small range, we did see, I think, increasing volatility in the last half hour or so of this price discovery process. You can see they're taking pictures, the market maker and the CEO of the New York Stock Exchange over there, still kind of wrapping up that process. But we saw the bids change, I think, 4 or 5 times, really, in the last half an hour. A new designated number would appear on the screen. There'd be a bit of noise, and then we'd start all over again, seeing if they could get the market to settle. Right. So eventually they did. 12:43, the latest
12:43,
ever.
The latest ever in terms of an IPO of the stock exchange. Claire Sebastian, thank you. Well, I get Shelley Palmer to join us. When we come back after the break, we will analyse the other business stories of the day. For example, in France, transportation strikes and the first proper attack against President Macron's economic policies. We'll talk about that. Tesla is rallying. We'll update you on why Tesla is rallying. And back to show you exactly where everything's been taking place. Going to leave you with a shot for the moment. Those are the men who set the price on the New York Stock Exchange. Plus Express next. Welcome back. Tesla's rallying. It had bad production numbers on the Model 3, but they weren't as bad, and they're showing some promise. Peter Valdes-Depena is in New York. Is that why they're rallying?
Well, yeah, I think also Tesla said they don't need to raise more capital. Investors probably like that. But yes, Tesla's also seen a big uptick in the production of the Model 3, but it's still not reaching its goals. Tesla basically crammed out a big week last week and turned out 2,000 of them, though. So things are looking up on the production side.
On that point, I mean, from the moment they announced the Model 3, it was always going to be the production ramp-up that was difficult. They were quite open about that. They've clearly failed in the initial foray. Is the feeling they will now get those production numbers to the thousands a month they need?
I don't know that a lot of people gain that much confidence from this. It was a little bit chaotic. As I said, they had one big week where Elon Musk moved aside the gentleman who had been in charge of production and stepped in himself to focus on it. Personally, I don't take a lot of heart from this 1 week. I still think we need a lot more consistency before we can expect to see Tesla achieving its goals anytime soon.
Right. And finally, Elon Musk's very bizarre tweet, bankrupt, sitting next down. I mean, will the market forgive?
That April Fool's joke about going bankrupt? Well, you know, Elon Musk is by no means your typical CEO. I think people look at that as perhaps a not too tasteful joke for a company in the position of Tesla right now. But yeah, I think they'll forgive that and move on.
Peter, thank you for that. Jim Bitterman is in France, where nationwide railway strikes, air strikes, transportation strikes have started. Jim, they are rolling strikes that are planned to last 3 months and have maximum pain.
Absolutely right, and the maximum pain is going to be felt by the users, which happened today as the first day of this rolling strikes. They're basically on strike for 2 days and then working for 3 days. So you have to look at a calendar and try to figure out when to travel in the country over the next couple of months. It's going to go well into June, and of course the government is banking on the fact that the unions are going to so irritate people that they're going to basically be even driven back to work. The unions are hoping to convince people the other way, and in fact, at the moment, the government seems to have public opinion on its side. There's about, according to an opinion poll yesterday, 53% of the French don't believe that a strike is justified, Richard.
And the phrase that I hear, they're calling this Macron's Maggie moment, a reference, of course, to Margaret Thatcher in the 1990s in Britain. Do you see it that way?
It's almost that, Richard. It's almost Maggie Thatcher and the miners. This is Macron squaring off against the railroad workers. Other people have tried to reform the railroad systems going back to 1995 and even earlier. They haven't been successful. So people are saying that if Macron can succeed at this, the next 4 years are going to be fairly smooth sailing as far as he's concerned and the labor piece is concerned. If he fails, however, it could be big trouble for the next 4 years for him.
And finally, Jim, remind us, what is these strikes? Every 2 days, every 5? I've forgotten the exact formula. There is a formula for this misery, isn't there?
Yeah, absolutely. It's 2 days of strikes and then 3 days working. And that's what one of the unions came up with, and the other unions are now following that. And that's meant to cause maximum pain to the government and also to give the workers more longevity because they don't get paid on the days they're on strike. So, in fact, they'll be able to make the strike longer. They'll be able to last longer on strike, despite the fact they're not getting paid.
2 days strike, every 3 days working. Jim Bitterman is our correspondent in France. I'm going to update you where we stand with Spotify at the moment. There you have Spotify. It is at 160 at the moment, 9.5 million shares which have changed hands. And the share price over there. Shelley Palmer is with me. Shelley, put it into perspective what you make of today's and Spotify's chances in the future.
I think it's a great day to be a Spotify employee. If I was a Spotify employee today, I would be having the greatest day ever because I just got liquid in a serious way. The stock price is about holding. We'll see the volume is kind of very large, and it's very exciting for a Spotify employee. If you're Spotify, the company, it's a normal day at the office because nothing's really changed. You haven't raised any money. You haven't raised your awareness except here at Quest Express, where you become super famous if you're Spotify.
Like your good self, sir.
But ultimately, they have the same challenges tomorrow that they had yesterday. They've got Apple nipping at their heels. They've got the whole streaming business nipping at their heels, and they've got to be great.
Looking at as we did at the numbers earlier, you know, Spotify 71 million or whatever, Pandora at 5.5
Apple at 38 million.
But does a Pandora even play anymore?
Well, the people of Pandora believe they do. I think that battle's been fought and lost if you're Pandora, but I don't want to put a nail in that coffin anyway. That's not my job here today. But I'll tell you that our friends at Spotify, they're talking about getting to 96 million subs by the end of the year. Apple's gaining about 5% per month. You've got Google Play Music. You've got Amazon Prime Music. There's a crowded space, and these guys have a long road ahead, and they have to be great. They just have to be great. What are they going to do to differentiate their product, Richard? That's the question.
Right, but the problem is, what can they do to somebody like me or the non-music geek?
There's only one thing they can do.
If it's already playing everything I want,
yes.
What else can they do for me?
They can give you a better user experience. They can make playlists better. They can make their recommendation engine better. They need to differentiate that way. By the way, no one in the world knows if that differentiation is going to make a difference.
Right.
But that's what they can do, and that's what they have to do. Because otherwise, this is a commoditized product at a basically competitive commoditized price.
And when you get the Alexas of this world, the Amazons, where instead of having to log into Spotify, connect it to my Bluetooth, which would then play by the speakers,
right.
if I could just simply say, Alexa, play Michael Jackson.
Which is what you do right now.
Right.
And it says it'll play on Amazon Prime if you're a Prime user.
That is a very... Of course, we're coming back to the president's point here of a company that's too powerful.
Well, maybe not. I don't know if the company is too powerful, but I do know that anything you say to Alexa is the scariest thing that you can say to a marketer. So there
Stay
you
where
have
you
it.
are.
I'm not
I
going
just
to
want
move.
to, very quickly as we close, just want to congratulate, sir. Just want to congratulate you.
My man.
What a day you've had.
So far.
Was it good?
It was fun so far. Yep.
Congratulations.
Thank
you
you very
worked
much.
hard.
We did. We all did. It was a total team effort. Total team effort.
But you broke new ground.
We did. It was a historical day.
Thank you. Good to see you, sir. Thank you. The designated market maker on there. We're going to close up the program with a look at the markets at the moment. The Dow Jones Industrials is currently up 115. The Nasdaq, stay with me, Shelley. Stay with me. The Nasdaq, we're crouching down, stay with me. The Nasdaq has been under great pressure. The issue becomes one of whether it's time for tech just to take a breather.
Yeah, no, I disagree with that statement. There are a lot of pressures on tech right now, some self-inflicted, but understand that more data will be created tomorrow than was created today, that we're living in a data-driven world, and turning that data into action is what the future of all business is. So to single out tech and say tech is in a bad place is to say that tomorrow is in a bad place, which I don't want to believe. So we know that we're creating a lot of data. We know that data needs to be turned into action. We know that the tech companies are the best at doing that, Richard, and so that's where this is going to go. And so if they're having a bump in the road, they're having a bump in the road.
And at the end of the day, if we just look at what we all do, then that ties us. Shelley, I will thank you. Go and get me Claire Sebastian as we wrap out the course of the day, because it has been an historic moment for the way you sell shares. Peter Tuchman.
Yes, sir.
Speak loudly to me.
Hello, Richard Quest. How are you?
What did you were right in the thick of it. What did you make of it?
You know what? I have to admit, it's uncharted territory. We've never had a direct listing here before. Okay, there were obviously advisors on call, Morgan Stanley and all the advisors on the deal. It went smooth and orderly. It opened well. It's actually holding pretty well. I mean, it is a bit of a high flyer, you know. You didn't get a sense of where the buyers lived and the sellers lived. The book we built a solid book.
You wouldn't want to do that on every IPO. A 3-hour book building.
I would not want to do that on every IPO, no. I don't really know why it was done. I'm sure there are investment banking reasons and there's specifics that the company wanted. But it opened well, it was smooth and orderly. Everyone's happy. Fun was had by all.
Fun was had by all. Claire Sebastian, did you have fun?
I very much did. Richard, look at the number of shares changing hands. 11.5 million. That's 5.5 million when they opened. It's really gone up.
It's really gone up. And that's all existing shares in the market, not new shares. Right. Thank you.
Thank you.
I think we now know more about direct listings than any of us ever wished to know about before. Quest Means Business is in exactly 3 hours from now. And let me leave you with the market. There's no one to high five with today. Oh well, if in doubt. Give me a high five.
Well, let's do this.
A high five from the NYSE. There's always a high five at somewhere. That's the market tonight. I'll see you at Quest Means Business. Whatever you're up to, I hope it's profitable.